When you start a business, as I have done many, many times in the last 40 years for myself and helping some friends along the way, and helping other folks start their businesses, and not as much a hands-on, but just giving them ideas, giving them certainly suggestions about marketing and sales. That's been my major theme in the last 40 years. Lots of experiences, lots of stories to share, lots of things that worked, a lot of things that didn't necessarily work, but we fixed them, make them work, and if we couldn't fix them to make them work, we got rid of them and did something else. It's very simple to figure that out. One of the very important things that you have to consider when starting a business is something that we call your small business money matters. Money always matters. And we've created keywords. Once again, I'm talking about small business keywords, and I want to share those keywords with you and very briefly talk about a response. Why is it important to be thinking about that keyword when you start a business? First of all, first and foremost, is accountant. Every small business needs an accountant. That accountant might be certified. That accountant might be a public accountant. That person might not really be an accountant. They may just be a bookkeeper. We don't not recommend using a bookkeeper. We highly recommend using a certified public accountant. That's all that I've ever used in my needing an accountant. An accountant will, number one, help you plan for those fiscal, those money aspects of your business, number one. And number two, typically, and this is how I've used an accountant, not everybody does it this way, but I have used an accountant to prepare my taxes for the year. There's another element of that that I've been doing the last couple years. I've actually created my tax return by using some software that we share every year at tax season. We'll start talking about it in January. But I prepared my tax return, not that I was going to submit, but then I took what I did in some software and I took it to my accountant, my CPA, and Rick then went over it to see if any changes needed to be made, if something I missed along the way, and then he submitted that revised form to the Internal Revenue. That's how we've been doing it the last 2 years. Okay, business insurance, another important concept. What I have found over the years in talking to the many small business owners that I have is that most of them, not some of them, most of them do not have the proper business insurance to protect your business. That's why you buy insurance. You buy it for protection. Now, it's very painful sometimes to make the premium payment for whatever insurance you kind of have, but when you need it, you're awfully glad that you had it. There's one business insurance that I bought a couple years ago because I desperately needed it. I got a letter from the state of Ohio, where I live, saying that my name and address and Social Security number was on a computer that was stolen out of the back seat of somebody's car in Columbus. I actually got that letter 6 months after most of the people got the letter. For some reason, it took them 6 months to send me that letter. At any rate, I panicked for a moment, called some friends up, and said, you know that identity theft insurance that you've been talking about? I need that right now, and I hope I'm not too late. So I bought it, knowing that if my identity was stolen, I would know about it very, very quickly, and I'd be able to take steps against that. The quicker that you are able to act when you know your identity has been stolen, the less painful the process is. Your identity getting stolen can be a very, very painful process. So for $35 a month, I have identity theft insurance. I also have, going along with it, I also have access to legal guidance as a part of that policy that I have. So for me, that business insurance is very, very important. There's other insurances that you need to protect your business in case of loss. Right now, one of the hottest areas of business insurance is internet insurance, cyberspace insurance, for all the craziness that goes on in cyberspace. Okay, enough about insurance. Banking. Many people need to go to a bank to get money so that they can start their business. Quite honestly, I've only done that once in my lifetime, and that was back in 1978 when I was starting a new magazine. I invested $10,000 of my personal savings into that venture. $10,000 was not enough. I needed another $10,000, so I went to a bank, and in 24 hours, back in those days, it was quite a bit easier to get money from a bank than it is today. Not quite a bit. It was dramatically easier. And so I got I had $20,000 to build my business, and that was really my only personal experience in going to a bank for money. However, in the last several years, I have spoken to many, many, many bankers about how responsive their bank is to the needs of small business folks. And you've heard me say it before, and I'll continue to say it again, is that community banks, and every community that I know has a community bank. They might not call themselves, you might not hear the words or read the words community bank, but they're in your community, and their purpose is to make businesses in that community profitable, because when they can make the businesses profitable, the bank becomes more profitable. So community banks are closer to the needs and wants of small business. You can go back, I haven't done a YouTube with a banker yet, but I've done many, many Stickam.com live streaming discussions with bankers. Small business banking is important. Now, when you go to a bank, many, many times that bank will say, well, yes, I like your business idea. I think the idea can succeed. I think you are the person to make it succeed. But, and there's a big but clause, you need to get the guarantee of the SBA, the Small Business Administration. You hear me talk a lot about SBA. They have the best website for small businesses that there is, SBA.gov. Now, the Small Business Administration, this is another key word, the Small Business Administration does not give you money for your business. The Small Business Administration will guarantee that loan that the bank gives you up to 90%, depending upon the nature of your business, depending upon what kind of loan you need. The Small Business Administration will guarantee business loans up to 90% of that loan. Now, banks love it because now the risk that the bank takes with you is decreased by that much if they know that that loan is guaranteed, the loan that they're giving you is 90% guaranteed or 70% guaranteed or 80% guaranteed, whatever it is. So the SBA.gov, not only can you get great information about small business from their site, there's over 4,000 pages of information there. You can get the forms necessary to start that loan process, that guaranteed loan process. Also, too, on their site, you get things like how to build a business plan. Even before that, and if you go back to some YouTubes that I did about 4 or 5 weeks ago, I went through a series of 25 questions that you will find on the SBA.gov website to see if you're the right kind of person, the right kind of entrepreneur to have a business. Go back and look at that, listen to those videos that I did, watch those videos, or just go right to the SBA.gov and search on their site, use the word entrepreneur, traits of entrepreneur, personality of entrepreneur, and you'll be taken to those 25 questions. So SBA.gov is another keyword. Another keyword is IRS.gov. IRS stands for the Internal Revenue Service. On their site, there are, I'm not quite sure how many pages on their site, but it's got to be probably close to 1,000 pages about various topics of interest to small business owners and how they relate to the taxes you have to file every year. And particularly of interest to us is what the IRS says about bartering. We'll call David's barter. Now, whereas barter is not a activity as such in the community, we don't register any barter deals. If you choose to barter with another small business person, and we highly recommend that you do, we don't want to know about that barter agreement. That's between you and with whomever it is that you barter. We don't want to know about it. We don't want to register it. We don't want the IRS to come to us and say, what do you know about that barter agreement? That's not what we want to do. It would be a waste of time and resources. However, it's important for you that if you barter, and you should think about it, that you have to tell the IRS that you did a barter agreement by creating a value to that barter agreement. But think about this. When you barter, you create, somebody has given you something that is of value, but you have given something up that is of value. So in many cases, it's just a trade-off. You have to report it as something of value that was given to you, but you work against that in terms of taxes with the fact that it's created an expense for your business that you also record. So it's very possible that there's no taxes paid on that, but you do have to report it to the IRS. And go to irs.gov. Borrowing is a keyword. You might borrow money from friends and family. Those are typical. Well, first of all, you might borrow from yourself, and there's a dynamic, there's a tool, an instrument that the IRS actually has created. If you have a 401k retirement plan, pension plan, you may borrow against that plan, depending upon how your plan was written, to use money in that plan, which you put into that plan tax-free. You created it tax-free before tax dollars. You can use it to start a business. Now, I'm not an expert on that. You need to talk to your accountant or someone who is an expert on how to use that money. But I know I've done it. I've used it in the past. I've used it many times in the past. So that's something that's available to you. Cash flow. You will always hear me talking about cash flow because it's the heart. It's the reason that we are in business. It's the most important thing that we do in our business, and that is to create cash flow. A business concept is only an idea. It doesn't really become a business till you generate cash flow based upon your idea. And once again, our Entrepreneur's Fun game, 24 landing pages who create the most cash flow for themselves on their landing page between now and the end of the year, which is about 92 days, will win subscriptions for 2013. Subscriptions to use our social marketing, social network technology. Cash flow, it's at the heart of it all. Profit. Businesses must show a profit if they are going to continue, unless you have totally, very, very deep pockets or access to deep pockets that will allow your business to continue without generating a profit. That's not the case most of the time. 99.9% of the time, businesses have to generate a profit. Now, we talk a lot about different levels of profit. Quite often, small businesses misuse the resources of that business because they generate cash flow, which is a good thing, but it's only marginally profitable cash flow. It may not be profitable at all. It may be just cash flow. You have to analyze all the resources that you use in your business, with time certainly being the most important one. It's the equalizer. We all have 24 hours a day, but you have to understand that your time is worth something, and you might be spending your time creating cash flow, but it might not be profitable for your business. So we talk a lot about profitable cash flow, something that is better than just marginally profitable cash flow. More on that later. Well, the next keyword is profitable cash flow. Bank loans, we've already talked about bank loans. Credit, people need, sometimes, most of the time, need credit. It might be personal credit that you get, and your use of personal credit cards to start and build your business. It might be credit that a bank gives you. It might be credit that a venture capitalist or angel investor. When you have credit, typically somebody wants to be repaid for the credit that they give you when you use it. If you have a credit card, many small businesses use personal credit cards to grow their business. I'm not going to say that it's a good idea. I'm not going to say it's a bad idea. I'm just going to say it's available. It's good if you can make it work for yourself. It's bad if you can't make it work for yourself. I have used personal credit cards for as long as I've been in business. That's because I made the decision to use my own money, right or wrong, as opposed to getting a bank loan or somebody else's money. That's just a personal decision that I made for myself, and for all these years it's worked, so I continue to do it. FICO score. Your FICO score is very important. I'm not going to spend a lot of time on it right now. Credit bureaus post your FICO score. They build your FICO score, FICO. We'll tell you what it means and how it is actually established. But in the meantime, you can Google FICO, FICO, and get a full detailed explanation. There's a difference between your FICO score and necessarily your credit scoring. And I just read an article this week about that and how you differentiate between the two. What you see as your credit score might not necessarily be your FICO score. Your FICO score is very personal. Your credit score factors other things into the equation, and you must understand that. A balance sheet. I waited way too long in life, in my business life, to totally understand how to read a balance sheet. I knew the basics. I didn't know on a line-by-line basis. I now have learned on a line-by-line basis how to read a balance sheet. Very, very important. And the same thing can be said for an income statement. I just kind of did whatever it is I do. I generated revenue. I knew along the way if it was profitable. I knew if I was able to pay my bills and something was left over, then it was profitable. But I didn't know that there's other things I could have done along the way to make it more so. And I didn't understand those things until I fully understood an income statement and a balance sheet. Venture capital. Venture capital is you go to somebody who's in the business, and not necessarily a bank. A bank is not venture capital because a bank is very, very specific in their guidelines. Venture capitalists are individuals who loan money, so to speak, but it's based truly upon your business principle and their involvement, that venture capitalist's involvement in your business principle. Venture capitalists want to get paid back. I mean, typically, they will get more money back than a bankroll. Venture capitalists, everyone that I've actually dealt with, deals in the 40% category. So if you generate $100,000 of profit, the venture capitalist wants 40% of that, or $40,000. That's not unusual. It's not necessarily a bad thing, because if you need large sums of money, in the millions of dollars, then you probably want to talk to a venture capitalist about that. And the same thing for an angel investor. An angel investor, typically, they become more involved in your business in a different kind of way. They take a position, they take an equity position as a venture capitalist will, but they're more hands-on, I should say, than a venture capital. And typically, angel investors do not give out as much money as a venture capitalist does, but they're in the business of loaning money to folks for good business ideas, getting a return on investment, number one, and two, taking an equity position in that company, taking in a partial ownership position. That's the difference between a bank and a venture capitalist and an angel investor. Banks don't want ownership in your company. The banks want their money back with interest. They're not interested in your business becoming an equity partner in your business. They just want to get their money back. And final key word that we have is budgeting. You need to budget the money that you have. Let's say you know that you've got $100,000. You need to properly invest in your business, and that's what the budgeting is. How much money goes for marketing? How much money goes for technology? How much money goes for labor? That's what budgeting is all about. And you have to learn to live within your budget. And because so many small businesses don't create a budget and don't live within that budget, then that's when they run into trouble. So budgeting is a mindset. Budgeting is very important, and it's something that you probably need help on what's the proper amount to budget in the various areas. That's why you have an accountant, be they certified, be they a public accountant. That's why you have them on your team. I'll end this discussion with talking about mentors of entrepreneurship. Mentors of entrepreneurship are a very important concept in our community. Mentors of entrepreneurship typically will be folks who have 20, 30, 40 years of business experiences. We will get involved with them on a hands-on basis to teach them how to make most effective use of our social marketing, social network technology, and they will use that for themselves to build a business idea for themselves. Then, because they are mentors, they will take their success stories and their failure stories, and they will share the experiences with other folks like yourself who do not have business experience, but they have a good business idea, but don't necessarily have they don't have a track record. They need the expertise, the guidance, the information, the learning that they can get from a mentor. I have mentors that I turn to in all the various aspects that I have in my business, and that's how I learn. And I have multiple mentors in accounting. I have multiple mentors in legal matters. I have multiple mentors in just general business ideas. I have folks that I take an idea to and I say, what do you think about it? And they will come back to me with challenging questions. And that's why I go to those folks for mentoring. If you go to davidsbarter.com/SmallBizDavid, that's actually what we are looking for. Mentors of entrepreneurship. I need 10,000 mentors of entrepreneurship in our community so that 10,000 businesses can get started with our social marketing, social network technology, and then teach 10,000, at least 10,000 other people how it all works.